Hey everyone, welcome back to the channel. Today we're diving into a company that is shaking up the healthcare industry with a fresh, modern approach. It's called HIMS and Hers Health. Take a symbol HIMS, and it is a telehealth platform that is making waves on Wall Street. So, if you're a swing trader looking for short term opportunities or an investor inspired by legends like Warren Buffett or Peter Lynch, this video is for you. We're going to break down the complete story of Hims and Hers, its origins, performance, recent news, and what the future might hold. By the end, you'll have a clear picture of whether Hims is a stock to watch or one to pass. Let's get started. Let's rewind to 2017 when HIMS was founded in San Francisco by Andrew Dudum, a visionary entrepreneur with a bold idea: make healthcare accessible, affordable, and stigma free. Imagine a world where you don't have to sit in a doctor's waiting room to get treatment for sensitive issues like hair loss, erectile dysfunction, or mental health. That's what HIMS set out to do. They launched a direct-to-consumer telehealth platform offering prescription medications and consultations online, all from the comfort of your home. And in 2018, they expanded to include Hers, a brand focused on women's health, tackling issues like skincare, sexual wellness, and mental health. By 2021, Hims and Hers went public, listing on the NYSE under the ticker HIMS. And from day one, their mission was clear: to disrupt traditional healthcare by leveraging technology to deliver personalized, convenient care at a fraction of the cost. Now, why does Hims and Hers stand out? Peter Lynch, one of the greatest investors of all time, loved companies that were easy to understand and solved real problems. Hims and Hers fit that mold perfectly. Their business model is straightforward. They're a telehealth platform that connects patients with licensed doctors online. You visit their website or app, answer a few questions, and get a prescription for treatments tailored to your needs. Whether it's hair loss solutions, weight loss medications, or mental health support. They make money through subscriptions and product sales. For example, you can get a monthly subscription for medications like Wegovy for weight loss or sildenafil for erectile dysfunction. Prices are transparent, often cheaper than traditional pharmacies, and they ship directly to your door. It's like the Amazon of healthcare: convenient, customer focused, and scalable. What's more, Hims and Hers has built a strong brand by tackling taboo topics. Said they have normalized conversations about men's and women's health, which gives them a loyal customer base. As Warren Buffett would say, that is a competitive moat, a unique advantage that keeps competitors at bay. Let's talk numbers because, as Warren Buffett says, the numbers tell you the story. Hims and Hers has been on a tear when it comes to growth, and according to their Q4 2024 results, they reported revenue of $481 million, a 95% increase year over year. That is not a one-time fluke. Their revenue has grown consistently from $101 million in Q1 2022 to a projected $520 to $540 million in Q1 2025. That is over 400% growth in 3 years. Their subscriber base is exploding too. They had 1.7 million subscribers by the end of 2024, up 41% from the previous year, and the net orders grew 22% to 2.8 million in Q4 2024, and monthly online revenue per subscriber jumped 37.7%, driven by premium offerings like GLP-1 weight loss drugs. And here's the kicker. They turned profitable in 2024, posting 4 consecutive quarters of positive net income. They're also free cash flow positive with 221 million in cash and virtually no debt. This is huge for a young company, showing they're not just growing but doing so sustainably. But it's not all rosy. Their marketing expenses are high, $182 million in Q3 2024 alone to keep acquiring customers, and this raises questions about long-term margins, something we'll revisit later. Now let's talk about why HIMS has been in the spotlight lately. In April 2025, HIMS and Hers announced a game-changing partnership with Novo Nordisk, the maker of the blockbuster weight loss drug Wegovy. This deal allows HIMS to offer Wegovy on its platform, bundled with 24/7 clinical support and nutrition guidance for $5.99 a month. The market went wild. Stock surged 34.9% in a single pre-market session and climbed 24% over the week following the announcement. Why? Because weight loss drugs like Wegovy are in high demand, and HIMS telehealth platform makes it easier for millions of Americans to access them. So this partnership positions HIMS at the forefront of the booming obesity care market. They've also expanded their weight loss offerings, adding Eli Lilly's Zepbound, Mounjaro, and the generic liraglutide to their platform in April 2025. This shows they're not just a one-trick pony, they're building a comprehensive weight management portfolio which could drive subscriber growth even further. But there is a one hiccup. Their chief operating officer, Melissa Bate, transitioned to an advisory role in April 2025, which raised some eyebrows. But the company's fundamentals remain strong and the leadership changes are common in fast-growing firms. Warren Buffett always says to understand the risks before you invest. So let's look at the competitive landscape. HIMS and Hers operates in a crowded telehealth space, competing with players like Teladoc, RO, and even traditional pharmacies. The weight loss drug market is also heating up, with regulatory shifts and supply chain issues creating volatility. Their high marketing spend is another concern, spending $182 million in a single quarter to acquire customers is aggressive, and if subscriber retention falters, it could hurt margins. Analysts also point to a high price to sales ratio compared to peers like Omnicell, suggesting the stock might be priced for perfection. Then there is the broader market environment. With trade tariffs and inflation fears in 2025, economic uncertainty could impact consumer spending on elective healthcare. Despite this risk, HIM's strong brand, growing subscriber base, and strategic partnerships give it an edge. So what is next for HIMS and Hers? Peter Lynch loved companies riding mega trends, and HIMS is perfectly positioned in two: telehealth and weight management. The global telehealth market is expected to grow at a 25% compound annual growth rate through 2030, and the obesity care market is booming as demand for GLP-1 drugs skyrockets. Analysts are bullish on HIM's Q1 2025 earnings, projecting 0.14 per share on revenue of $537 million, a 180% earnings increase, and 93.4% revenue growth year over year. The Novo Nordisk partnership could supercharge subscriber growth, and their focus on personalized offerings like custom skincare and mental health plans keeps customers coming back. Long term, HIMS is vertically integrating, controlling more of the supply chain to improve margins. They're also expanding into new markets like dermatology and mental health, which could diversify revenue streams. And with $221 million in cash and no debt, they have the firepower to innovate and weather economic storms. So for swing traders, the upcoming earnings report on May 5th is a key catalyst. Analysts expect a beat which could push push the stock higher, but volatility is likely given its 60 million shares shorted out of a 188 million float. Let's talk valuation. HIMS is trading at a price to sales ratio of 4.2, lower than peers like Viva Systems, but higher than Omnicell. Its market cap is $7.7 billion, and while it's not cheap, it's undervalued compared to its growth potential, according to some Wall Street analysts. For swing traders, HIMS offers short-term opportunities around earnings and news catalysts, but the high short interest and volatility mean you need a strong stomach. For long-term investors, HIMS and Hers is a classic Peter Lynch growth stock, disrupting a massive industry with a clear competitive advantage. Warren Buffett would appreciate its strong balance sheet and brand note, but he would caution about the high marketing spend and competitive risks. My take, HIMS and Hers is a buy for growth-oriented investors willing to hold through volatility. Its fundamentals are rock solid and the weight loss market is a gold mine, but keep an eye on margins and economic headwinds. There you have it. The full story of HIMS and Hers Health, from a startup disrupting healthcare to a Wall Street darling with massive growth potential. Whether you're swing trading or investing for the long haul, HIMS is a stock worth watching. What do you think? Bullish on HIMS, or are the risks too high? Drop your thoughts in the comments below, and don't forget to like, subscribe and hit that notification bell for more stock deep dives. Until next time, stay smart and invest wisely.